So, Christian, it's the hottest topic of the day. What are your thoughts on inflation and, more importantly, how advisors should think about it as they construct portfolios?
Sure. Well, I think, inflation is a risk. We're filming this on a day where CPI came in a lot higher than people expected. And I think two interesting ways of combating it, and they're different ways and diverse ways, are the following. One is when you own a high quality blue chip portfolio like the Devo ETF, these companies have pricing power. They didn't become blue chip high quality companies without setting themselves apart for a long period of time. And oftentimes in an inflationary environment, they're going to be able to pass through, we believe, pricing on their goods and services to the consumer. Why? Because they're the gold standard in their industry. So I think that's one way to think about inflation from an investment standpoint. Another way is potentially to look at some of these unique themes that really are moved based on different dynamics than interest rates or inflation. Oftentimes, the catalyst behind themes are quite different than the overall stock market. So, for example, the adoption of blockchain or cryptocurrency globally is more of a catalyst for blockchain-related stocks than inflation, perhaps. Or, for example, in our cannabis ETF, legislation and new medical discoveries, be it on cannabis or maybe even CBD, are going to move those markets, and that's different than inflation. So I think there's two ways to think about it. One, again, is pricing power and high quality names that are going to be able to pass through any inflation to consumers. And then the other is focusing on themes that have different catalysts that may be more important to those themes than something like inflation risk.
Kevin, as we sit here in June of 2021, how are you looking at inflation as you construct portfolios?
Well, we think that the inflation being as high as we're currently seeing it is a temporary situation based on the reopening. We're not going to see 5% growth quarter over quarter consistently, in my opinion. At the same time, it's great to see it when you consider the fact that we went through a 14, 15-month shutdown, and we see that the prices of goods are appreciating because there's a demand for it. And we talked before on the show about the unprecedented, I hate to use that word, but I throw it in there as a 5-cent word, consumption prospect for the U.S. consumer moving forward. So second half of this year, back to school should be amazing. Heading into holiday spending should be incredible. But I think that the growth and the spike in inflation should level off. The Fed's telling us that they certainly believe it, and I tend to agree.